You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, it's that time again. It's time to talk about some volatility. Yes, it is time for Volatility Views, the premier program for volatility traders. My name is Mark Longo. If I sound a little bit different, it's because I'm coming at you, not from our studio in Chicago, but no, I'm still down here on the Intergalactic Spectacular, enjoying a little bit of the old Southern studio hospitality, even though the weather not too hospitable. Right about now, looks like it's monsoon season down here. Also seems like it's monsoon season in the markets. We'll get to that in a little bit. But first, helping me to discuss all the madness, the chaos, the maelstrom that are the markets today, our old friend, Mr. Meatball, doing double duty. He's also holding down the MIAX hot seat. Mr. Meatball, welcome back to the program. Can you handle all this double duty, sir?
Welcome to Miami. Bienvenido a Miami. Yes, I can handle both the Miami hot seat and the option pit cold seat.
Yeah, it's more of a lukewarm seat, shall we say, over there. That means you have to talk nothing but spikes for the next half an hour. Can you handle that, sir?
Yes.
All right. Then with the gang all assembled here, we're going to dive right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review. This is indeed the portion of the program where we talk about some volatility. And surprise, there is some today, actually, to talk about. You know, it seemed like we were setting up for pretty much a pretty tranquil, a pretty quiet end to the week. You know, next week's going to be a holiday week. We're going to enter that, so that'll obviously maybe quiet things down before. We usually expect things to pick up again coming into September after the dog days of August are finished. But then again, you never can account for the trade war curveball, and that's pretty much what we got tossed today. China saying, the heck with you. You too can play that game. We're doubling down on that side as well, announcing $75 billion in new tariffs on U.S. goods today. Tariffs of 10 and 5% going to take effect in batches of goods on September 1st and December 15th, respectively. I didn't give precise details, though it did mention import duties on U.S.-made autos and auto parts. So all of that combining to really give the market just a slap in the face to end the week. It was looking pretty tranquil. Now pretty much all of the major indices off and off hard. S&P and Dow both off about 2% or pretty close to it. And then we got tech-heavy NASDAQ just feeling the heat, off 2.5% right now. We've got oil taking a beating as well. Pretty much the only green on the screen today are VIX and spikes and gold. That's pretty much it. Gold up nearly 2%, right around 1538 or so. Crude, of course, taking a bath today as well. We've seen that global demand story has been the predominant driver above everything else, above Middle East tensions, above domestic supply, above all these other concerns. It's been global demand, obviously exacerbating the trade war. Not exactly a good thing for global crude demand. So as a result, we're seeing crude taking it on the chin. And like we said, the only things really up coming into showtime are volatility. We're seeing VIX cash up to about a 20.5 or so. That puts it, let's see, up about 4 points just today, and then about 2 points from our last show last week. So still elevated even from last week. So spoiler alert, none of us had it this aggressive on the crystal ball.
I looked, Mark, I looked like spot on brilliant until 10:11 a.m. Central Time.
You mean spot on brilliant in the pick that I forced you to pick because I picked your original pick?
Yes, exactly.
So you're 18.5.
I think we were we were basically 16 on the spot, 16 on the head when I got up, I walked past the television, and one of the financial news networks were on, and it said S&P up 1, VIX down 0.5 point, all the vol futures are down. I literally have a 12-ounce glass of water. I filled it up. I walked.
Did you do a spit take? Did you spit all over your monitors?
You know what? That would have been amazing to have done that. No, it wasn't even the monitor. I walk out and I look up at the TV again, and we're already down 25 points. We moved 1% down in the amount of time it took me to fill up a glass of water, and it all because of a tweet storm.
That's why I tease Uncle Mike on the option block, but you can't take those bathroom breaks. You can't take those cup of water breaks, sir. That's when it all goes to hell.
I mean, it has been talk about headline after headline after headline, right? So we open up down because China had the tariffs. Then Powell comes out and is pretty dovish. Pretty darn dovish. However, he's not dovish enough because within half an hour of his finishing up his speech, Donald Trump outlaws companies in the United States doing business in China via tweet, which, by the way, he's not allowed to do. Then he says we don't need China anyway, and then he says Jerome Powell is the only reason why the U.S. economy is slow, and the markets went from probably going to creep up. I bet you we were going to end up right near 29.40, and with a VIX maybe getting near 15, and instead we're down 2%, and the VIX is going to break 21, I think, by the end of the day. And we've gone from a full-on contango to a full-on backwardation. Pretty darn crazy.
By the way, I'm just hearing that some of the live stream wasn't going through. That should be better now, so you guys should be hearing us. We have been doing the show. I guess it wasn't going. That's what happens when you do the mobile studio. Sometimes all the moving parts don't move together as you like, but you guys should be hearing that now, so hopefully everything is working out there. But Mr. Meatball, sounds like an interesting turn of the day. Too bad. I was looking forward to that option pit spit take. I guess not today. Maybe next time, sir.
No, next time. But I can only do the spit take if Lauren and I are both getting water at the same time. I only do spit takes when I have someone to spit the water on.
Oh, that makes it just disgusting then at that point.
Yes, exactly.
It goes from comedic to disgusting very quickly on that point.
That actually happened to me this weekend. So I'm taking I'm on a diet, so I decided to take a little bit of a break from beer. And so my brother-in-law is over for Valentino's 3rd birthday this weekend, and I'm like, let me get you a beer. So I crack it open, and what do you think the beer did to me?
It exploded all over you.
It exploded all over my face.
So there you go. At least you didn't spit it on anyone.
So I said, I'm not drinking beer this week. Crack. The beer spit taked into me.
So the beer had other thoughts for you. And
the beer went, you're giving a beer.
Well, let's look at what else is lighting up the tape out here in addition to Mr. Meatball's spit takes. We got spikes up pretty hard as well, as you would expect, up to about 21.25. That puts it up about 1.5 points from this time last week. Our old friend VVIX as you would expect, also moving to the north pretty hard, up about 12.5 handles today to about 113.5. That puts it up about 5 points from where it was this time last week as well. So things are rocking and rolling, as you might imagine. Seeing that VIX futures curve also reflecting some interesting juice, shall we say, Mr. Meatball. Anything catching your eye in the weirdness of the VIX futures curve today, sir?
Like I said, we've got a crazy backward, whereas yesterday, this morning we were in looking at a pretty strong contango, and a kind of let's get out front of the long weekend, complete vol collapse, and now we've got the cash is trading a point over the SEP. September's trading 40 cents over 30 cents over October. October's trading 50 cents over November. So if you had to pick out one month that's maybe a little pricey relative to the other months, you might say October. And obviously December is the cheapest of the brood. And that's an interesting one. It's coming in at 1860. So, you still have that seasonality kink in there, which I still don't understand why that's there. It's been proven false, but that is what is there.
No, it drives me crazy, by the way. Why does every single financial outlet and just major mainstream outlet, why do they always lead with the Dow? I'm looking everywhere right now. Dow over 500 points. I get it. It's a bigger number, so it sounds cooler. But still, who looks at the Dow first when they're looking at these things? But every headline, you would think the Dow was the leading indicator of the U.S. It's a sad state of affairs.
It is indeed.
But I digress. Before we get into some more volume things, I'm kind of just curious. I'm sure a lot of our listeners are as well, Mr. Meatball. You are ostensibly a volatility money manager. So these are interesting times for you out there. Walk us through, obviously, a spit take aside, when you see stuff like this lighting it up out there in the marketplace. What's going on in Carmen line? What are you guys rolling? What are you trading? What are you up to in these kind of turbulent, frothy markets, sir?
So you have to be willing to stop. When you get the number one mistake people make is that something changes in their trading assumptions and they don't do anything about it. So I saw the news, we're down 38, and in our broadcap fund, which is our hedged S&P fund, we're down 38, and we're in a full-on bull market, no volatility, and I know we're going to flash. This is similar to, kind of like our Thompson boys. We're going to flash long vol signal. I get out front and I buy a nice chunk of long vol, and same thing in our vol fund. I go out and buy some VIX butterflies to get long vol exposure. I don't try and be some brilliant guy and fade the move. I jump with the momentum. Volatility is very much a momentum trade, and you have to be willing to go with that momentum. And so when the news came out, I said, well, this is going to be bad. And I just, we just said, let's ride this vol wave, and have gotten pretty much hedged and, gotten some long vol exposure to the upside as well.
That's why I wanted to put that out there. I had a feeling you were going to say something like that. A lot of our audience, the knee-jerk reaction. We talk a lot of downside. We talk a lot of short vol, and that certainly is a good way to go. But the knee-jerk reaction, I think, for a lot of our audience is, okay, fade, right? Fade aggressively, fade immediately, fade hard. I kind of just wanted to put that out there that, there are other options out there. You don't have to immediately, try to be the hero, like you said, right, and call for the fade. Because you're right, these are different scenarios now. The underlying assumptions everyone have changed. We weren't planning on this.
We're in the middle of an elevated volatility environment. You can't, it's not like 2017 where you get these little VIX spikes, then you fade them. When the VIX is 12, you get these spikes to 18. And, when you've seen multiple times, VIX is 12, spikes to 18, goes back to 12. That's a pattern. But once you break out of kind of extended low volatility and into what I would say is a moderate to high volatility regime that we're going to be in for, looks like another month or, at least another few weeks, you have to be willing, understand that you're going to have these moments of momentum. Now, I don't know how long it's going to last. Are we just going to go right, we spiked to over 21. Are we going to make another run at, 24, 25, then go right back down to to 16? That's been the pattern. But, who knows? Maybe we break that pattern. We're heading for. We've had 4 tops. Are we heading for a quadruple bottom? And the answer is we might be. Where are we going to be when we get to 24 and a quarter again for the 4th time? What's going to happen? And so, we're in a choppy market with relatively high vol and high realized volatility. And that's really the key here. Realized volatility is not low.
Yeah, that's a good point. Realized vol at the end of the day drives all things. And when you're actually seeing the vol in the marketplace, it's kind of hard to argue for the super aggressive fade. We touched on this last week. We were saying maybe the worm was turning. Maybe there was a little bit more embracing of this higher volatility regime, at least in the near term. I know, Mark, you were a little on the fence. I think I was, quite frankly, too, but it seemed like there may be some environment of more willingness to accept a little bit more vol. They were fading it earlier this week, and then, of course, it shot back up at the end of the week. So maybe a combo of, the tariffs, obviously, but then the market maybe being a little more poised to allow some of this upside as opposed to instantly jumping in and fading it as aggressively as they have in past moves. Let's look here what's going on out here, what's been trading. Let's see if they are fading it or not this week. Let's look at the big trades. Let's start off in Spikes land, as we are wont to do. We were talking about that big roll last week. That was pretty much the big mover and shaker out there in Spikes land these days. Looking at the top positions right now, the top 5 open positions, the biggest position, I should say, 12,028 actually. So topping off a little more. Some of the retail folks getting out there as well. That's always fun to see. Of the OC 30s, that's what we were talking about those last week. Part of that roll. Then we got the OC 20. So is that OC 2030? 1 by 2, so 12,000 by 6,000. 6,000 of the OC 20 is still open as well. So they were closing and rolling for the most part. 6,000 also worth noting, though, still of those SEP 25s there as well. Number 3, 3,000 of the SEP 17s. Number 4 and number 5, we've got the SEP 24 calls. All that adding up to about 27,000 contracts outstanding. So a pretty robust OI for a fairly new product out here this week. Let's move on here to what's been going on out here in VIX options. As you might expect, a pretty robust volume week here this week. Today, coming into showtime, it was about 250,000 contracts on the tape. I'm going to pull up a more recent number and see if I can get the more current level for that. I got to imagine a few more prints have gone up since then, but it was about 250,000 contracts on the tape. Let me just look really quickly, listeners. Again, I'll check in with our friend, the Flow Master. See, about 300,000 over here, according to our friends over there in Trade Alert land. So a decent volume day, but not exactly blowing the doors off. Again, we have seen some sustained vol for a while now. This is not our first rodeo, so not exactly the shocking move. It might seem shocking in the broad indices, but in the vol space, not exactly shocking. So about 300,000 contracts on the tape here, a little bit of the ways into showtime. The ADV also creeping up. It's up to about 731. That puts it up about 42,000 contracts compared to this time last week. So you know what it takes to really move the needle out here from an ADV perspective in VIX land. And obviously we've been seeing some action out there, 731. Pretty much close to double what it was just about a month ago out there when it was looking pretty paltry and threatening to break 400,000 to the downside. Yesterday, we saw 419,000 contracts on the tape. Wednesday, 598, almost 600,000. The big day of the week was Tuesday, 687,000 contracts. Monday, 571. Let's break down what all this fury, this frenzy of trading has added up to. Let's look at our top 10 size positions out here in VIX land right now. Number 10, the OC 40s. Interesting. The 40s lighting it up. Again, maybe a sign of where we are now in the vol curve. We don't usually see the 30s get a lot of love. Don't usually see the 40s getting some love. So maybe that's emblematic of what we were talking about, what Simon was talking about last week. Maybe a little bit of a new upside era. 148,000 of those bad boys. Number 10. Number 9, the SEP 21s. $150 open there. Number 8, OC 16 puts, our first put on the list, 153,000 there. Also, the dearth of puts, maybe another sign of what we're in for here. Number 7, the SEP 26s, 159,000. Number 6, the SEP 30s. Remember, our old friend the 30s, still out there, still popular. 185,000 for number 6. Number 5, the SEP 20s, $185 on the tape. Number 4, the SEP 16 puts, our second and final put. So only 2 puts out of the top 10 this week, listeners. Again, maybe a sign of what's going on out there. SEP 16 puts 189,000. Number 3, the SEP 24 calls, 217,000. Number 2 here, SEP 23 calls, 231,000. And number 1 with a bullet this week, the SEP 25s, seem comparatively much more reasonable than they did a week ago. 389,000 of those bad boys. Total OI about 7.5 million. It's come off a little bit. Some of those big positions have rolled off the board, but about 7.5 million contracts open, about 5.5 million on the call side, and about 2 million on the put side. Before I start breaking down some of the big prints of the week, Mr. Meatball, anything resonating for you on the VIX options side? Any trades really standing out?
There's been, for how crazy today is, we actually saw a lot more paper on like Wednesday than we did today. Today, I think kind of one of the more interesting trades that we saw after all this went down, customer bought 7,500 of the OCK 14 puts to sell 1,300 of the OCK 24 calls. Paid $30,000. That was kind of interesting one. We saw some, out of the money, we saw some call sellers. We saw a SEP 27 call buyer for 95 and a OCK 22 call seller at $1.97. Wednesday, we saw, I think, a lot more interesting stuff. We saw some D's put 1x3s, the 1714. Customer bought 70,000 of the SEP quarter calls for 62.5 cents. That wasn't bad. Those are paying today. Customer bought 40,000 of the SEP 20s for $1.25. Also not a bad trade. Hindsight 2020. Those were two of the bigger trades that went up as a print this week. So those are a couple interesting ones. One that's not as great is a customer sold 24,000 of the OCK 26s at 88 cents on Wednesday. That's a bit of a stinker on a relative sense to some of the other trades that we saw this week.
That's the hero. He had to fade it, right? And
exactly.
And apparently not working out so well. But you're right. Looking at the prints today, you would never know that we were selling off 2% across the board here, because the numbers going up today, at least in VIX options land, not exactly lighting up the board. The biggest print out there right now looks like it's a bit of a funky ratio risk reversal. We've got the SEP 17 puts going up 14,500 times for $1.13 against 4,350 of the SEP 19 calls for $1.95. Looks like they're selling the puts to buy the calls there. Again, doing it on a bit of a funky ratio, and that's one of the bigger prints we're seeing today, which tells you something. Also seeing somebody, it's like apparently maybe dumping out some SEP upside. SEP 24 is going up about almost 12,000 times right off the bid there, about 77.5 cents. So that's opening actually though. So interesting. Maybe someone taking it, maybe going back to being the hero, maybe someone trying to fade here pretty aggressively. Yesterday, the big print on Thursday was our old friend, the 1x2 was back for some pretty decent size. It was the OCK 1925 1x2 going up 20,000 by almost 40,000, 20,000 by 39,400, doing it effectively for 7 cents here, 207 by a buck here on this 1x2. Lifting the offer on the 25 calls, which is kind of interesting. I got to imagine they're going into that. They're probably selling one to buy two, but crazier things have happened. It is not opening on either leg, so they could have been unwinding what they had before as well, which if they did, maybe they wish they waited a day or so if they are indeed taking off that short 1x2. Also saw a bit of a funky fly, ratio fly, really. Not quite a traditional fly going up yesterday. It was the SEP 37 half, 42 half, 45 call ratio fly going up 6,800 by 17,800 on the 42 halves, by 8,700 on the 45. So funky, I think, is the best way to describe that one. The ratios don't really line up. The premium maybe does, but still a bit of a funky fly. You like that one, Mr. Meatball? Let's say he did it traditionally, 1x2 by 1. SEP 37 half, 42 half, 45 fly. Does that one get you excited, sir, in Carmen line?
That's not a terrible trade. I mean, what did he pay for it? If he didn't lose his shirt buying it,
the ratios are all over the place. I don't know the exact level.
Yeah,
he paid 17 for the 37 halves. Looks like he sold 2 of the 42 halves for 13 cents. You're up to 26, and they paid 12 for a weird number of the 45s.
That's not a bad little trade. I don't hate that. I've seen much worse. Let's put it that way. You're really banking on there being some sort of upside. You want it like an upside move, but not nothing that's going to absolutely just completely. You're looking for a move to like 40. If you go beyond that, you start running into some problems. But it's not a terrible trade, I guess. I've seen worse.
Actually, it looks like it might have been like about a 4-cent debit because the ratios are a little funky, but still, that's even more attractive.
It's just a cheap way. It's just a cheap way to get long.
Cheap flyer on some upside,
as long as you're not too long, right? It's not. I don't hate it.
I know you like yourself some good VIX flies. I don't know if north of the 35 strike is where you typically like to play with
I like
those.
to go a little closer to the money.
But still, an interesting one. You mentioned the big call prints on Wednesday. Wednesday, kind of one of the big volume days of the week. Kind of strange that we're not seeing similar size paper today, but that's the way the VIX ball rolls here. The big prints, you mentioned the SEP 25s, Mr. Meatball, on Wednesday. They went up for size, including a block of about 56,000 for 62.5 cents. The old 5/8 rearing its ugly head out there again, near the offer out there. We've also got SEP 20s going up 40,000 times on the bid on Wednesday for $1.25. There's a upside call palooza out there. OCT 26s for 88 cents, about 24,000 times, 3 cents off the bid there. None of those, I don't think any of those were opening. So, none of those were opening. So, size big prints. Also looks like the one big spread was one big put trade of the Wednesday was somebody looks like rolling some SEP 16 puts out to OCT, buying themselves another month, paying 20 cents to do it 21,000 times. Tuesday was a pretty light day. The big print looks like a SEP vertical, SEP 2025 vertical going up for looks like 80 cents, 13,000 times. 20. If they were buying that, I'm guessing they're probably a happy camper today. Not opening, so again, it's hard to tell. So much OI on these strikes to parse the tea leaves. But if they're buying that vertical, I'm going to go out on a limb and say they're probably happy today. And then Monday, we saw the big print of the day. Another kind of lighter day. The SEP calls were leading the dance on Monday. About 11,000 of the SEP 25s going up for 81 cents. That's pretty much right off the bid. And 10,000 of the SEP 22 calls for, what do we got here? $1.21 here. That's kind of mid-market. We got our buddy Steve Sears here. He's chimed in on the show before, he heard what you said here about vol markets not panicking today, Mr. Meatball. He's saying that this is because it is a 20 VIX and the vol market has evolved since February 2018. If we get to a 30 VIX, the market will be very uneven. At 40 VIX, panic. What's 40 VIX mean? Historically, economic recession and worse. We have seen, certainly, he's got a point, have seen a certain evolution since last February, that's for sure.
Uh-huh.
So we're certainly not at the 40 VIX level by any means.
No, but you look at VVIX, it's 113. So there's definitely demand for options. It's just not, we're not seeing a ton of volume today. A lot of people are positioned, and I think the market is also, the cryptic part of the Trump tweets was that there's supposedly news this afternoon coming. So that is. That's the cryptic thing, that they're going to make more announcements. You got to wonder, what do you think is going on in the Oval Office right now? What do you think Mnuchin and Larry Kudlow are saying to the president right now?
Your favorite name in the world, Mnuchin. All the scuttlebutt that we hear, he's been kind of ignored left, right, and center, right? So I'm guessing he's not too happy that it's reached this level. I mean, he just came back from his trip, right? The last time Trump went off on his tweet. He just landed, and Trump's like, you know what, the heck with it. Here we go. Next round. So I can't imagine he's too happy to see these things. I mean, anyone in the economic side of the administration knows prolonged trade war is not exactly a good thing, particularly when you're heading into an election year. So I can't imagine there's too many smiles, but who knows? We'll see what other shoes are willing to drop.
I don't think Navarro cares as much, but Mnuchin's got to be going nuts. Larry Kudlow's got to be like just doing a face palm right now. I mean, it is just one of the more insane. Today's just one of the more insane news-driven days that I can remember. I don't know about you, but
we had some good days back in the SPX, and like the Yeltsin days when he would die every other day. Those were always pretty good. Those always were good for some good vol juicing up there. I'm trying to remember was it Rubin when he surprisingly stepped down clearly there was a little bit of, shall we say, information leakage that day, because all of a sudden, go figure, every phone in the pit started lighting up to lift offers on puts, right? So that one's memorable because it left a mark on a lot of people out in the pit that day. So yeah, there is certainly some ones that were smaller stories that resonated pretty strong for me. But yeah, this one, from a global macro perspective, is certainly an interesting one to see how it's playing out. Let's see how it's playing out in your favorite product to fade. Maybe not these days, but usually. That's our old friend VXX. What do you guys call it? Predictably crappy. Predictably unched this week. 28.5 coming into showtime, and it's pretty much exactly where it was this time a week ago. We were at 28.5 a week ago. So if you just look at VXX week to week, nothing has happened at all. You're fine. Yeah. You have missed nothing. Today's volume pretty firm, about 181,000. But again, not blowing the doors off either. The ADV up there is up quite a bit. It's up to 270. Yeah. It's up about 20,000 from this time last week. Before I break down the top positions, Mr. Meatball, anything catching your eye out there in VXX this week?
You know, it's another one. It was less predictably crappy than normal, I would say. You know, it was absolutely, looked like it was going to die, but then, again, another day where we go quickly. It's now predictably going to be gaining value every day. And that is because of it now having this, it now has, contango working in its favor, and that's going to be a major driver. So
yeah, I mean, it seemed like it had given up the ghost. Listeners they were complaining last week,
it was all set to give up the ghost, and then decided it didn't want to anymore because President Trump decided to open his mouth. That's what I mean by things. You have to be willing to change your opinion when everything around your theory is changed. Then guess what? You need to change your theory because you're going to lose. And that is what happened today.
What's the old quote, right? The markets can remain irrational longer than you can stay solvent, right? So.
Well, I would say that, but if we're in a rational market and then it goes suddenly irrational, don't keep thinking that it's going to fix itself right away. That's not the way these things work.
Yeah, all those folks last week who were complaining about the prices of those VXX puts, it seemed like they were paying off. You guys were pretty happy there for a while there. Then, of course, crazier heads prevailing, moving it back up to the upside. This is why we always say, have a little bit in your back pocket for those upside days. VXX does not always go down. And let's look at the top open interest out here to see. Looks like everyone was playing the fade game this week. Only one call position in all of the top 10 listeners. So interesting. So I guess you're not alone in wagering on the fade this week. Number 10, we got the SEP 28s, the only calls on the list. 21,000 of those. Everything else puts. SEP number 9, the AUG 24 puts, 24,000. Number 8, AUG 26 puts, 25,000. Number 7, SEP 22 puts, 27,000. Number 6, the SEP 18 puts, about 29,000. Number 5, the first Jan on the list, Jan 14 puts, 29,000 of those. Number 4, the SEP 19 puts, 30,000 and change. Number 3, the AUG 25 puts, about 35,000 of those. Number 2, the SEP 20 puts for 43,000. And number 1 this week with the bullet. SEP 17 puts, 53,000. I kind of mocked those last week, and they look even less. They have less of a chance of coming to fruition this week, unfortunately, for all those out there who are piling into that SEP 17 strike. Total about 1.6 million contracts outstanding, about 800,000 on the calls, and about 840 on the puts. So pretty close calls to puts out there. Today, the big prints, not a lot lighting it up. The 2,500 of the AUG 27 puts for 85.5 cents. That's actually, looks like, through the bid. So someone crushing those, maybe trying to dump some puts before they got too cheap. And then AUG 35 calls going up 2,500 times for $1.04 on the bid as well. Bit of a buy right going on up there. So interesting stuff. Mr. Meatball, have any of your crazies in the pit chat, have they been slinging any VXX these days?
They absolutely, but mostly hedged and tied up with some other trades, which obviously makes the most sense. That's been kind of our MO the last few days and weeks.
What fun is all this hedged and tied stuff? You got to just let it fly, sir. Go crazy. That's what you teach in the pit chat room, right? Let the dice fly high. I think that's your motto over there in the pit chat. Stolen from one Mr. Caesar as he marched across the Rubicon. All right, let's go here and see. That's always It's always good trading advice. Take it from ancient conquerors. Let's see, this week also on the earnings front, I mean, I know everyone's macro today, but there still is some micro to be felt out there. And that was what's driving a lot of the market earlier this week. We saw earnings coming out of big names like Home Depot and Kohl's, Wednesday Lowe's, Target, Nord. The retailers just dominating the tape this week, lighting it up. VMware yesterday, Gap, Dick's Sporting Goods. Of course, we have a lot of those profiled over there on the website. TheOptionsInsider.com is the place to go. If you are indeed so inclined, click on the Options, News, and Articles tab on the top right there. You'll see the Earnings Move and Earnings Move results reports. If you did that, you check out some of the big names we have the results reports for here, like Dick's. Dick's going into their announcement was they popped off yesterday before the bell, so Thursday before the bell. They were about 33 going into the announcement. They ended up trading up. Let's see, they priced in about a 2.5% move. They ended up delivering over 5, about 5.3%. So outperforming kind of the order of the day this week, or order of the week really, for the retailers out there. Target, Dick's, a lot of names blowing the doors off their straddle out there this week. If you're interested in how these things are breaking down, including the earnings season report, we have that for you there as well, how the season is breaking down and how it compares to previous season. Quite frankly, there's a heck of a lot of data over there available for you guys to crunch and to analyze, and it's all free, so take advantage of it before we come to our senses over there at TheOptionsInsider.com. If you like it, make sure you hit up our friends over there at ORATS. Tell them you like it and to keep doing it because you guys love it over there. All right, Mr. Meatball, are you ready to put on your question-answering pants, sir?
I am indeed. Answer your pants questions.
There we go. All the questions this week about tailoring and pants, so get excited. It's a special edition of the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. This is the portion of the show where you guys take the reins, your questions, your comments, your insights, your pearls of wisdom. You got so many. Let's see how many we can see how many we can get to today. Let's start it off. Nelly. Nelly's got a nice, straightforward question. Why do you guys hate TVIX so much? Let me regale you with a tale, Nelly. No, we don't hate really anything here. We've just in the past listening. If you listen to the long history of the show. By the way, Mr. Meatball, we hit Vol Views 365 last week. So that means you can listen to one a day for a year if you were so inclined.
Wow, there you go.
We got a
who
full
wouldn't want to
year
listen to?
of Vol
Who wouldn't
Views
want to
offered.
listen to me every day for a period of time? Just ask Lauren how lovely it is to hear me every day. She's in the room right here. Right now, she's looking at me, smiling, saying, and she's actually mouthing, "Mark, every day hearing your voice is better than the last time."
It's a treasure, and she cherishes it every day, I'm sure. But listeners, yeah, if you want to hear the show, the evolution of it, all the way from the early days with Volex to the SIBO years and now to MyX, it's evolved many times talking about different products. Check it out. You can do one a day for a year. That's how many we got for you there in the archives. But transporting us back to today, we have talked about TVIX a lot. It kind of came on our radar quite a bit a few years back when it very infamously imploded. And really pretty much due to the poor construction of the product, it had a big, massive fund flow, as I recall, and that kind of crippled it. And then the whole thing kind of almost shut down as a result. So ever since then, we've all taken a dim view of TVIX. Lately, of course, I know a lot of you like to trade it because it's one of the last of the Mohegans out there. I mean, obviously, SVXY, a shell of its former self, XIV, no longer on the board. So if you want some of these levered vol products, TVIX, one of the last games in town. But it's still just a product we haven't had a lot of love for. I encourage you, Nelly, check out the option block we did yesterday. The folks from Fidelity said they're getting hit up a lot about TVIX these days. And we had a good discussion about the nuances of it, what makes it tick, why we're probably less enthused about it. By the way, Mr. Meatball, I asked your cohort yesterday, Mr. Rocklopster, if he had any use cases for TVIX, and he said, "Yeah, my use case is to avoid it."
No, I mean there are some reasons. I mean, it's an interesting shortable product. It doesn't do a great job on the upside. If you could catch it on a day like today and buy a bunch of it, you can make a pretty quick profit. But you really have to. It's not one you can buy and hold. Just ask a bunch of advisors at Wells Fargo.
Yeah, that's another narrative. It gets lumped into this narrative, you need to get some long vol exposure in your portfolio. Get long this VXX or get long this TVIX. And we've always said many times that is a terrible way to go. That is not what these products are designed for at all. So that's another reason why we take a dim view of it, because it gets misinterpreted quite a bit as what the actual use case is. It should be, if you're using these things, they should be short duration only, not long term, unless you understand all the things we talked about before with the erosion products like VXX and others. But in general, I think hate is a strong word. I don't think we hate. We just we don't like it very
Dislike.
much. How about that? to parse some words there. Not a huge fan here. All right, let's see. We got people talking about bullish risk reversals. I don't know. This one might have came in. This came in before the big pop, obviously, today. But TradeCap says, seems like bullish risk reversals are the savvy play right now in volatility. Downside is limited, particularly if you sell put spreads, and the upside is unlimited. Why don't you talk about these more on your show? Well, I just talked about one today, listener. So hopefully that excited you. But we talk about a lot of the flow out there. We see variations on this theme. Obviously, anything that's selling downside and buying upside is effectively a risk reversal. It doesn't matter how it's constructed. But we see a lot of the 1x2s as more of the trade du jour these days out there in the vol space. So we talk a lot about those because that's kind of taking up all of the oxygen in the room. But Mark, I don't think we've ever said we're averse to. I'm a big fan of bullish risk reversals, and if you construct them well in VIX, they could be pretty tempting.
In fact, that sounds like the opposite of what I've said in the past. I don't mind them if you structure them properly. I think that I literally, MRA likes to call this the seagull because obviously you have to name every trade. But the classic sell put to buy call spread is not a terrible trade.
Yeah, I mean, I'm a big fan of bullish risk reversals across the board. And for VIX, they could certainly work out here. I mean, we've never dismissed them. I guess he's saying, why don't we talk about them more? Okay, we will work more bullish risk reversal conversations into the show going forward. How about that there? What was your handle? TradeCap. There you go. Hopefully that makes you happy. Then someone's going to write in, why don't you talk bearish risk reversals? No one's ever happy. Let's see. What else we got here? Orland, or ORLND3 wants to know, I trade my volatility almost exclusively through SPY verticals and iron flies. Am I missing something by not having that VIX or spikes exposure? Well, we never mind. We've talked many times about, using the vol products versus the actual core underlying SPX, SPY, whatever your chosen flavor is. Those are very direct, and we like that because you know exactly what you're getting. The one thing I think if you are missing anything is what everyone's in the VIX game for, right? In the spikes game. They're getting that upside. That's what everyone's there for. And so if you're not doing those, you're missing that. But just about every analysis I've ever seen of comparing and contrasting, just about every strategy you've seen, comparing, let's say the old traditional S&P put versus the VIX call versus calendars versus verticals versus every nuance therein has pretty much been examined. And all of those, when you take out the crazy VIX upside days, then VIX underperforms. But those crazy VIX days, that's kind of what you're there for. So that's pretty much the only thing I would think they are missing. Would you concur with that, Mr. Meatball? Yes,
I would. That's absolutely what you're missing.
Let's see here. More people chiming in. Oh, you're going to like this, Mr. Meatball. We were saying that the markets aren't panicking today, and people are chiming in.
Gosh, not VIX is up 25%.
Yes, exactly. Actually, you're off, though. 23.8%. This guy, Mike Shell, writing in saying, 23.8% isn't exactly a small move in VIX. I knew you're going to love that.
That is, come on, guys.
I knew you're going to love that. Just for you.
Either stop referring it to that way or stop listening to the show. And we'd prefer the former to the latter.
I knew that one would just pique your fancy so much.
That's just ridiculous.
Our buddy Mr. Steers chiming in again. He says 20 is a sticky strike for VIX. Always has been. Maybe he's buying into that that reverse gamma argument we were talking about before. He said it fell from favor from February 2018 mishap, but it is back in vogue this year. Key test, I think, is what happens if VIX blows through 20. Then this will get more interesting. Well, I guess we'll see. But there you go. I knew you would love.
I'm a big fan of Mr. Sears, so
I knew you would love the percent of percent. That's kind of why I had to put that one out there. It's a good thing we got the live working again, so people could share their enjoyable views.
Awesome. Thanks.
And by the way, we tease because we love. Keep on listening, even you percenters, we love you all. All right, our old friend, Mr. Dingle, J3
Wow, we're gonna
Dingle.
be down 70 here, Mark. It's getting ugly.
Yeah.
Who's down 67? Yeah, the VIX is gonna make it a really nice run here.
Yeah, maybe Steve's prediction will will come to pass of exploding up blow through the 20. It's not really blowing through it, but if it does, that would certainly be an interesting thing. We got our old friend. Let's do a couple more, and then we'll get to the crystal ball. J3 Dingle, long-time listener. He says, Dear Mark.
Big fan of the J3.
Yeah, gotta love J3 Dingle. Dear Mark, have you ever had the managers of the ABR Mutual Fund ABRSX on VolViews? If not, maybe they would be a good guest. No, we have not, J3. Maybe we'll check that out, what they have. I don't know. I don't know those guys. You know those guys?
I don't.
We'll look into their products and check them out. Maybe they would be a good guest. We always like having different vol perspectives on the show. And Mr. J3, he's a long-time listener, so we like to make sure we look into all of their requests. If you guys have guest requests, hit us up. So we're not snobs here. We'll look into all these different ones. Let's see. Let's do one more. This is the long one about.
Yeah, one more.
One more about gamma. This is a long one. Here we go, Mr. Meatball.
Something medium.
Something medium. This one will probably set you off, which is good. This one comes from Andex, and he writes, I just listened to Bernie S. I guess it means Bernie Sanders. On the Joe Rogan show, he hit on his taxing of evil Wall Street speculators and derivatives things again. He wants to pay for his free college for all program with a tax on Wall Street speculation that he says will generate $2.4 trillion. What do you guys think when you hear stuff like this? Don't you get tired of being the boogeyman for every politician that wants to score some cheap political points? Mr. Meatball, I know you have no thoughts on this whatsoever, so by all means, say nothing.
I mean, that's just silliness. I mean, that's... it's like when everybody goes after the banks for, Main Street, no Wall Street. I mean, it's just kind of dumb, going after know-nothings. There are ways to improve, I think, the way we tax people. And all sorts of ways that are far more efficient than what we're doing now. And actually, I think there are ways to really force a boost to the economy, maybe even tax a little more, and actually do some positive things that make some more sense. I have some strong feelings about stock buybacks, things like that I don't know do a lot of great good, and yet get some positive tax treatment. Like, the fact that a stock buyback gets similar tax treatment to, say, constructing a building, I think is a little ridiculous. And so, you could talk me into some things there with Mr. Sanders, but this idea that we go after transactions is absolutely ludicrous. Maybe, actually, I'm going to take that back a little bit. Maybe if you, above a certain number of transactions, it would make some sense in order to try and weed out a lot of like the really crappy, stuff that doesn't actually add value. That's just trying to, the packet stuffers, if you will. And for those of you who don't know what a packet is, it's a very inside baseball term, but it's basically that's how orders get sent to the exchanges is by like data packages. And one of the ways that a lot of the banks or a lot of the trading firms like to screw with their competitors is by kind of packing. I'd almost like to tax a number of a percentage when you exceed a percentage of quotes sent relative to the overall number of quotes sent on the market. I think that would make things a lot more efficient.
I think you sound.
I'm guessing you like that idea.
You sound like my buddy Mr. Petterfee out there. He wants to shut all those dudes down there as well. But don't get us wrong.
They don't have a lot of value. That's why.
Don't get us wrong. We're not averse to to going out there and maybe restructuring some of the way that Wall Street is taxed. I think maybe you're right. Maybe there is something that needs to be done there. I think we've just seen the data on transaction taxes are uniformly terrible, they're uniformly poorly implemented.
Yes.
And we see with these taxes, they change behavior, so they never generate the revenue that they always claim to. So they're just a failure on every level. They'll cause all sorts of issues. You'll see liquidity dry up. It'll be a terrible thing. So it's not a good thing. We can say that pretty firmly. But if other ideas, sure, we'll explore.
Yeah, I'm open.
Yeah, we're not here to hold water for anybody here on the show, but ideas that have been proven to be false and not and demonstrably bad for the marketplace. We're not going to
Yeah, I mean, that did not work for, I think they tried that in London, and it was an unmitigated disaster.
Yeah, they tried it in several places, and every single one of them has been just a complete disaster from beginning to end. So
all it does is cost them money.
We do not need to repeat that experiment there. But we do need to do, though, is keep on rolling and see what the hell the vol gods are up to these days. A little bit of the old crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. This was the challenging one this week, coming into showtime. As you recall, listeners, I was at the very deft 18.5. The meatball, I spooked him to the downside, so he went down to 16.75. So he was copying my pick from the week before.
No.
And then our buddy Simon
my
was
18.5 because you went in front of me.
I went first. I had the more accurate prediction, therefore I got to go first. That's how this game works, sir. When you get the more accurate prediction, you can go first. I don't hold it against you.
Oh, whatever.
And then our buddy Mr. Simon was kind of the Goldilocks in between at 17 and a third. Spoiler alert, none of us factored in the trade war today, so we're not exactly seeing those levels. All of us outside of the required 1 point range. You're seeing spikes right now coming in the tail end of the show at about a 21.40, or it's actually 21.5 now. So gapping up a little bit, and our old friend VIX Cash was at about a 20.90. Let's see exactly where it is right now. There we go. It's at about 20.90 still. So 20.90 on the VIX Cash. 21.5 on spikes, so that premium back in spikes, which is interesting. But spoiler alert, none of us winning this. So I'm technically the closest, Mr. Meatball. But you know what? Since you're so complainy this week, I'll let you have the choice. Do you want to go first or do you want to go last?
I'll go first, and I'm going to guess 18.5.
See, I reward you. I give you a kind gesture. And
I just slapped you in the face. You slapped
me in the face. So remind me never to do that again. Oh, no good deed, listeners, goes unpunished here on the volatility. There we go. 18.5 for the meatball. So like I said, we're at about a 21.5 on spikes, 20.90, almost 21 on VIX Cash here. I'm not liking these levels where we are right now. Again, crazier heads could rear themselves. We could get up to low 20s, even higher, early next week. I think maybe by the end of the week, some calmer heads will prevail. But I think we'll still be fairly elevated. I think maybe we'll even be north of an 18.5. I'm going to say 19.30 this time next show.
All right.
So we got a little bit of some vacillation here next week. So still elevated, still frothy, still juicy. If you guys have thoughts,
Vacillation, that was one of my favorite songs by the Flaming Lips.
Not one on my playlist day to day, I have to say, sir. But I'll check it out just for you. And speaking of music, that music that's kicking in, at least on the podcast version right now, means, unfortunately, listeners, we've come to the end of an epic sojourn through the world of volatility. Mr. Meatball, things are not exactly right with the world. I don't know if you know this, Mr. Meatball, but the Dow is off over 500 points. So that's
really?
That's a scary thing when you see that literally everywhere.
Like it might get to 600 when all is said and done. Today is
all the major
ugly.
indices have continued to sell. So we did our job. We spooked the markets to the downside because everything, Dow's off 2.25%, S&P off 2.33%, NASDAQ closing in on 3% to the downside. So this looks pretty ugly, Mr. Meatball. But before we go, if folks are or maybe they're terrified of these markets, they need a guiding hand to lead them through the volatility morass these days. Where should they go? What should they do?
Go to optionpit.com/Kramer. You can do, and you can take our VIX primer and get a half an hour mentoring session with me, and you can get a month of Option Pit Live and the Vol newsletter, all for $97. optionpit.com/Kramer. And of course, as you know, if you want to know about fashion and finance and cooking and the Enneagram, what's it called? What's it called, Lauren? Yeah, the Enneagram test, or about what streaming services we like the best. Subscribe to the Cash and Couture podcast with at Big Blonde Hair and at Option Pit.
There you go. Available on most major podcast services, I assume. So there you go. Check out Cash and Couture for all the latest on VIX and fashion. And of course, if you want to learn what's going on in the land of spikes, MIAX Options, MIAX Options.com/spikes, or just type MIAX and spikes into your Google machine. It'll take you right to the spikes overview page. You'll get the spikes quotes, the spikes historical data, all that good stuff. A snazzy little video as well explaining spikes to you in about 2 minutes. So all sorts of good stuff. If you're intrigued, maybe you want to start slinging those 10 locks for yourselves, MIAXoptions.com/spikes is the way to go. If your broker doesn't have them, hit them up and tell them you want to trade it, or let the MIAX guys know, and they'll reach out for you. There's strength in numbers, listeners. And on behalf of the Meatball and our friends over there in the land of MIAX, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for staying with us during this turbulent, frothy market. Hopefully your risk management is in place. And we'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice.